Crypto Hotep here with another investing video. We are on week 28 of the Family Portfolio and Dividends Tracker. Love to see it. Now, if this is your first time watching the video, feel free to go to week number 1 in the channel and watch that video in full. You'll get my whole methodology and thought process of what I'm doing. Basically, in a nutshell, I gave my family a short list of stocks that I listed out for them through some research, and I asked them to pick their favorite brands or favorite companies. They picked them. We used M1 Finance's technology to help craft what they call pies, which are individual sub-portfolios within the main portfolio. Every family member has their sub-portfolio of stocks that they chose, and all encompassing that creates the family portfolio that we track every week. Every week we look at the balances, we look at the dividends that have been paid out, and we just track that investment journey that I'm having with my family. Sometimes my family asks to add stocks to their portfolio. The main premise is we want to find good companies that we're going to invest in for the long term and not just ones that we're going to turn and burn. Hopefully, these videos will be educational for my family in the long run, and that's why I'm making them. When I'm gone, they can uncover these videos and maybe carry it on if they want, or just learn something. If you're learning something and you find these valuable, fantastic. Feel free to like, subscribe, comment, but none of what we say here is financial advice at all. With that being said, we'll jump in here. So we always go to the week prior and just see where we're at. So week 27, which was last week, we were at 893.46. Money or weighted rate of return was 16.22, and the dividends earned were $7.02. This week, we're a little bit boosted here, 896.29. We're getting close to 900. Money weighted rate of return, 16.39. So that was up. And then the dividends earned was up, $7.58. Let's see what we have cooking here. So if we look at the activity between this week and last week, what has happened? So we received some dividends. Okay. So we received some dividends from Microsoft. We also received some dividends from 3 cents from 4 cents from Hershey Company, 4 cents from Google, 11 cents from Duke, and then 30 cents from McDonald's Corporation. Now, if you're saying, Crypto Hotep, this isn't that much. This isn't a lot at all. It's only pennies. You are correct. But if you've been watching this a long time, you know what I'm going to say. What we're looking at is just consistently holding these great companies, getting these dividends, and increasing our position in these great companies. So in turn, these dividends can increase. And then we can just continuously buy shares with this dividend allocation here. The main premise is we want to at some point, we want to get up to the point of us living off of our dividends that these great companies are producing for us. But in the meantime, let's accept these dividends and let's use this dividend money to then rebuy shares. And that's what we're going to do with that. So we did have a little buy with all of this, and I believe I just bought Apple. We just bought some Apple today with that. So again, that's something that you can do when you have all of your dividends. You add them all up, and then you put that money right back into the market. The good thing is with M1 Finance, you can actually choose what you want to do with your dividends. And I think, let's see. Yeah, you scroll down and go to dividend handling. And then the dividend handling is going to ask if you want to add the cash to the account, reinvest in the underlying security, which is the actual stock or ETF, sweep to high yield account, so you can move it to their high yield savings account, or customize per security. So you can actually divvy it up, and you can select two. So if you get one dividend, you can kind of split up the dividend between multiple securities, which is nice. Typically, I'll just reinvest it into their drip program here. But for our family portfolio, I like to have it as cash in the account, and then I can buy shares for my other family members as well. And I'll take control of that. So We always go from bottom to up. My wife is on the bottom today, this week again. So we have a weighted rate of return of negative 31.49. Yep, negative 31% is right. Negative market gain, and then the ending value is 59.08. It seems like 59.08 has been that sticking point for her portfolio, and that started all the way in May, as you can see. We haven't really gone past that since then. And if you've been following the channel, you'll know why. Mainly, it's our Celsius holdings. We are still buying Celsius, though. So our Celsius holdings has been the culprit for that, down over 66%, up over 8%, and up over 2.5% for Google and Pepsi company, respectively. Are we still going to be buying Celsius? Yes. It is still in a key level. It hasn't broken down further as of yet. And I still like that Celsius company. I just think the stock is really at a cheap right now. Okay, let's go into our middle. So our middle has been really consistent. This is a very safe portfolio for our middle. Nothing too crazy. It's very safe. And I mean, we were double-digit return, 11.76%. That's nothing to shy away from at all. Market gain of $6.43. And look at these holdings right here: Amazon, Costco, Nintendo, Target, and Starbucks. Nothing has changed, and it's all in the green right now. Nintendo just came out with news, I believe it was either last week or the week prior, about Nintendo Switch 2 that will be coming out. So something to keep in mind here. And then Starbucks continuously going up, that we'd like to see. In Costco, nothing is stopping the Costco train by any means. Let's go into our youngest. Our youngest with a, and your eyes aren't deceiving you, a 27.44% money weighted rate of return year to date. What do we have here? Nintendo, even though the Nintendo was green for our middle, it's not green for our youngest because we bought at different times. So down a little bit over 0.25% here, but Tesla, double-digit return over 45%. Apple, double-digit return over 33%. And then Starbucks, double-digit return over 26%. We were buying Starbucks when everybody was telling you that Starbucks was done and they were over with, and we kept buying. Okay. What else do we have here? We have our oldest with a even 24% weighted rate of return. And our oldest has been really making the mark with her portfolio. There's only 3 stocks. It's a legit 3-stock portfolio, and not bad stocks at all. We have McDonald's, Apple, and Costco. Nothing to shy away from. We already said Costco is something that can't be beat and it can't be stopped. Again, the market and the quote-unquote analysts will tell you that Costco was done. They did tell you that earlier in the year, 2024, when it came up to $600 and $700. Let's look at Costco, for instance, right now. We're at $906 per share for Costco. Fantastic. Just amazing. Just amazing. And again, they do have earnings next week, so something to see there. Okay. And last but not least, let's go to my stocks here. Let's see what we have here. So I am up almost 14%, 13.99. Gradual increase, as you can see. Market gain, $183. And then the dividends earned, I have over $6.39. As last week, a very good sight to be seen. I really like my portfolio here. Every sector of it, as in last week as well, is in the green, even the meme stocks. And every sector is very close or has a double-digit number for weighted rate of return. The technology sector is in double digits, one of the highest, but real estate up over 29%. What's holding it? Guess what? PSA, public storage. You love to see it. Public storage is just booming right now. And why is it booming? Well, again, if you're unfamiliar with public storage business model, it's one that can't be altered by a pandemic. It can't be altered by a recession. Literally, it's a very simple, tried and true method that continuously works day in and day out. People rent spaces that need to put things in them when they don't have the space for it. Very, very safe stock with public storage, and a stock that's continuously yielding great dividends. So, and one of the real estate stocks, ironically, that is a REIT. Public storage, they consider that a REIT as well. Okay? And that's for real estate. Um, we can also look at consumer staples. Consumer staples generate a nice 10% weighted rate of return, very consistent here, as you guys can see. All the quote unquote boring companies, but they're all in the green. TJ Maxx doing some things here, and I love to see that. They did increase their dividend as well this week. So this is a fantastic sight to be seen here. Colgate still on a tear, currently up over 19% here. And then we have Clorox, Walmart, nothing stopping Walmart, over 31% here. Walmart just made some news with having a strict pay system here. And I believe it was instant bank payments. Yeah. So instant bank payments and cutting out that middleman, which is going to be a big deal for, I would say, Visa and MasterCard if I'm a betting man here. So, and with that being said, guys, we will round up the family portfolio. So currently, again, we're at 896.29. We're in week 28, an above average over 16.25% weighted rate of return with $7.58 from the market, or from the dividends, I should say. Now, one thing that did happen, one of the biggest things that happened in the market this week, Fed rate cuts. Feds did cut rates this week, and the markets loved it. So Jerome Powell got on stage and did make the announcement that they were cutting rates by 0.5%. That was tremendous because most quote unquote analysts thought it was going to be 0.25%. So the 50 basis point rate cut was something that the market hadn't priced in yet. So the markets loved it the rest of the week. I believe the VU, S&P 500 all made all-time highs again. And one thing is, in terms of the rate cuts, you will see more and more commodities, stocks, and crypto potentially go up in the near future here. Why is that? Well, because feds are cutting rates, which they're cutting rates for borrowing, which is great. So you can borrow money at a lesser rate. However, that sitting cash that you have in your high yield savings, maybe a money market, even maybe a CD, will be going down as well. So that APY will be going down as well. It might not go down a whole 2%, 3%, 1%, whatever, but it eventually will tickle down in the future. So that's something to keep aware of. Just as it went up, those rates will be coming down. And with that being said, all the money that is sitting in those money market accounts, that's just chilling in those high yield savings accounts, they have to go somewhere so people can earn interest on them. And where do you think they're going? People are going to be putting it in the market. People are going to be putting in the market. They're probably going to be buying Bitcoin, probably going to be investing in the S&P 500, probably going to be buying some silver, gold, whatever. But those commodities, those stocks, those cryptos will be going up, I believe, because of this. And as a reminder, and we said this before, Warren Buffett is still sitting on a lot of cash, so he more than likely will be hitting the buy button very soon as well. That's all I got for you guys. So as always, If these videos have helped at all, feel free to like, subscribe, comment to the channel. Let me know what you think. Let me know what you want to see. And as always, guys, thank you and happy investing.